real differentiating factor looks like. How are we going to be able to add privacy to this in a way that's seamless, especially as all these large corporations are coming on board. We've avoided the whole giving away a ton of grants to a ton of people kind of thing. So you were speculating on the tech, but not necessarily how revenue would need to be built. So if you create successful applications, you're going to be able to get revenue. Things are changing, and launching a token just to launch a token is not something I'm interested in. I think of a successful token launch as a token that goes up and to the right after unlocks occur. Not for the first month, not for the first 3 months, but it's like if once investor unlocks start to take place and no one wants to sell the token because they think it's going to still keep going up, that's a successful token.
Hi everyone, and welcome to Onchain Honestly,
a podcast about what actually works in crypto as a business.
We're long-term believers in this space, and we want more honest conversations about what's changing and why.
So we explore real models, practical outcomes, and what it takes to build something that lasts.
Hello all. Today we'll be discussing how to successfully build a new blockchain in 2026. Now, if you started wondering why on earth we'd need a new chain at all, I completely feel you on that one. But still, if we were to design a new network, how would the entire process look like? How would we make sure the business model behind this chain is sustainable? Would we need a token? Would we still use those old growth playbooks? There's so much to unpack, and we definitely won't be doing it alone. Today we're joined by Azeem, co-founder at Miden, a new privacy-focused blockchain. Azeem, welcome back to the show.
I'm very happy to be here. Our last episode together was very nice, and so I'm glad we were able to make this happen.
It was indeed. Azeem, shall we start with the fundamentals? We need a sort of 101 into Miden. What is it? Why are you building this? And what is the unique value proposition here?
Yeah, totally. So I will start with Miden is a new privacy chain operationally starting as an L2 on Ethereum. We are non-EVM. We are in testnet at the moment, looking to go live into mainnet sometime this summer, pending audits, but looking like sometime at the end of July is the hope. I know there's always changes that come with when it comes to software development roadmaps, but as of now, like plan to go live in July. And so much of it revolves around the fact that we just don't believe that blockchains can truly go mainstream without privacy. And Miden is a chain built with, zero knowledge foundations from the ground up, as opposed to approaches where you sort of do bolt-on privacy on top of public chains like we've seen a lot of. And I mean, I think the TAM of privacy and blockchains is the TAM of all payments, right? Like for the most part, if you think about the addressable market size, let's just say for private payments, I think the addressable market size is payments around the world. Like it's not really like, oh, it'll cap at 2 billion or something like that. I think that it's reasonable to say that the entirety of payments happening in the globe could be part of what is the addressable market for something as simple as payments. And so it's a really big opportunity. I mean, I think earlier today I was just seeing, well, maybe it was the CIO of Bitwise was talking about the new privacy arc and how Canton, Tempo, and Arc have collectively raised over $1 billion in the last, half a year. And that it seems like it's the next important thing. And increasingly, we've seen over the last few months since like the Zcash pump, for the most part, towards the end of last year, that everyone is now really tuned into what's going to happen in privacy.
Well, you added to that as well. You raised,
Yeah.
what, $25 million last year?
Yes. Yeah, we did a $25 million raise. We announced it, I think it was like super early May of 2025, and we raised it from A16Z Crypto, 1KX, and Hack as co-leads, and then we had a bunch of other funds and great angels involved as well.
Yeah, I think Andreessen Horowitz is very interested in this area in general, right?
Definitely. I mean, just the other day after they announced their new fund announcement, they announced Fund 5 for 2.2
Yeah.
billion.
Yeah.
And Ali Yahya is the one who's the GP that is most excited and constantly talking about privacy. And I was last night during a workout listening to his episode on privacy is the moat with with Laura Shin. And so yeah,
Just
it
two
was a
days
good.
ago. Yeah.
Yeah, it was a good episode. And it's just, for them, privacy is something as a fund that they've been talking about, that they've been investing in for a long time, whether it's Alio, Aztec, Seismic, ZK Sync. Like they're, Arc now, they announced the lead on Arc. So they're very interested in privacy, but understandably so. They see that we've gotten to the place that, being able to say that your chain is fast isn't enough anymore. And the foundations will require being able to add the idea of privacy in for things to really continue to accelerate in the ways that they feel that it will in the future.
Do you think that, in previous times, we as an industry kind of misunderstood what privacy actually means, or why? Why is it important?
I think part of it is because people for so long and even now think that there's a level of anonymity to using blockchains where they think that because they're setting up a wallet and they're not doing any sort of KYC on self-custodial platforms and that the only thing addressable about them is something that's like 0x555 or something, right? Like this like 0x and then followed by letters and numbers and that's their wallet name and they think that their public address somehow makes them anonymous or pseudonymous at best. And the problem with that is most people aren't aware that companies out there, whether it's Nansen, Chainalysis, TRM, Elliptic, Arkham, have created entire massive data businesses around being able to figure out exactly who is behind these wallets and what is going on. So I'd say that's part of it. I think the other part of it is that we still sort of see it happening and it's unfortunate, but the idea of privacy in crypto is sort of continuously connected to the idea of the North Korean hackers who are using crypto to be able to fund a nuclear program that's antagonistic to, let's say, the United States in particular. And then other than that, what I would say is that things weren't where they needed to be for privacy to work. We still needed so much from basic foundational tech to be developed for blockchains, for it to be able to be fast enough for bridging to work, for there to be throughput speeds that would allow things, that there were other things to worry about and that privacy would sort of come later. But now we've gotten to the place that a lot of the things when it comes to usability and speed of a chain have become sort of table stakes. And now when you're looking across chains, without naming names, that you can sort of say there's not much of a difference based on like the foundational architecture of those chains. Perhaps there is when you look at some of the apps that are built on top of them. But now the real differentiating factor looks like how are we going to be able to add privacy to this in a way that's seamless, especially as all these large corporations are coming on board and saying that this is a requirement for them. And so, there's been tons of privacy projects who've been raising and different approaches, whether it's ZK or TEEs or FHE or MPC, and different projects trying different ways of doing things. And so I think now we're just in this place where this is sort of the next thing. It was why last year when everyone was like, oh, privacy is the new meta, and I was telling everyone it's not a meta that's going to go away quickly the way we've seen so many other metas, because there needs to be true winners in this before we can move on from privacy as like a meta in some capacity. But in the meantime, sort of, what is it? A rising tide will raise all ships, kind of a thing. Like just today, I think, or yesterday, Zcash was written about in the Wall Street Journal, and so as privacy becomes more important for specific projects, it sort of helps all projects in privacy at the moment.
I wanted to actually ask a little bit more about the infrastructure that you're
Hmm.
building with Miden,
Sure.
especially a bit more about the Guardian. I
Yeah.
understand that's your sort of quite new, implementation of your private state manager. So maybe if you would like to give a bit more insight into what it
Yeah.
is.
Totally. So Miden, technically speaking, works through client side proving. So let's say Ethereum as a blockchain works where you send your transaction to the Ethereum blockchain for execution and re-execution. And then it puts it on the ledger and it's there for everyone. And there's like a globally verified public state that happens through being able to do that. You can do account recovery as well, where if you just keep your seed phrase, the blockchain is sort of holding all of that information. And so if you lose, your phone or your computer that you've been doing everything on, you use your recovery key and then you have your wallet back. Miden is unique in that when you use it, that you generate a ZK proof using the device that you're on. and you send the ZK proof to the network to be verified. And where that changes things is that there is no way to do recoverability of your state in that way, just specifically because everything is happening on the device. And so you you basically send a proof that your state has changed. State change meaning, like, I don't know, you sent 20 USDC to someone else and now you have 20 USDC less, and you send the network proof that you have 20 USDC less. And so what was interesting was this introduced an interesting problem, because if you're a user, whether you're an institution or an individual, the idea that if you lose your device, or if it gets messed up, or if you drop coffee on it, that you lose everything that's in your account is a serious problem. And we were thinking around what would it be that we could do to help solve for this. And what came about was what you called Guardian. We came about calling it that. And it's essentially an opt-in, like voluntary opt-in for a user. So the user can still say, I want to completely manage everything in my super cypherpunk ways, and I'm okay with whatever comes with, if I lose my device. The other option is sort of this, voluntary opt-in to Guardian. And Guardian works a lot like a 2 of 3 multisig. And in that would be, one is the hot wallet key that you're using on your phone or computer to be able to sign transactions for whatever it is that you're doing. A second key would be a cold storage key that you sort of hold away somewhere else in the event that you lose your wallet and need help on recovery. And then the third one is a service key where they get the ability to sign and reject transactions. They get the ability to have a full view key into all of the transactions that are going on. They get the ability to do on-chain or off-chain KYC to be able to whitelist wallets into their service. They get the ability to do real-time compliance on transactions that are taking place so they can sign and reject. And then finally, they also don't trigger any of the custody laws that come with actually holding the funds, because they're not unilaterally able to move any of those funds since they only have a 1 of 3 signing there. And that service is called Guardian. And so we just announced Guardian recently and are going about being able to basically see, who are going to be the initial guardians on Miden. And where this gets to be really interesting is that it could end up being banks, it could be custody providers, it could be sort of anybody could choose to do it. Another place is that, you and I could run our own guardians, and the reason for that could be that you want to set up AI agents that have certain rules and regulations that they must follow, and you're able to set those up into your Guardian, so you can run your own Guardian for being able to do things with agents on Miden. And this is sort of the idea of it. And where we found that this ends up being phenomenal is that it helps the user in making sure that they can do account recovery. And then on the institution side, or whoever it is that signs on, there's a variety of ways that they would be able to almost do like a choose your compliance journey for being able to say, if you're, I don't know, JP Morgan, you're going to have much more strict versions of what you're looking to do in terms of setting up the compliance around your Guardian than you would if, one of us decided to run a Guardian because we wanted to have AI agents that were doing things that had strict requirements. And so it's something new that we launched, and it's honestly one of the really exciting things that we're doing at the moment, just because while I didn't expect it, I found that the large institutions that we've been talking to all sort of like perked up, because when we start, Miden will be a centralized L2, will be the only sequencer. And for the time that we're running it in the beginning, we will have access to all of the transactions that are taking place on the network, right? So it's not like it's private to everyone. It will be private to everyone except for us. And so during that phase, were there any things that, I don't know, law enforcement would want to understand, we would be there to be able to do that. But then we do plan to decentralize this. And one of the things that networks have really been struggling with explaining, or institutions have been struggling with understanding, is how are you supposed to create a permissionless network and a decentralized network that will still allow for these sort of compliance things to go on. And we think that we've created something that will actually allow it. And in conversations with institutions, it seems like that too, because their eyes and ears perk up and they're like, wait, that's really interesting. Or like, we spoke to a government in South Asia, and they said they potentially would want to run their own instance of Miden. And we said, well, you don't actually have to run your own instance of Miden. You can just run a Guardian. And then all of the wallets that would be able to transact with each other would have to do the KYC to be whitelisted, and you can do real time compliance checks and everything. And so the entirety of the people in that would be able to do so, which changes from, let's say how the Providium or Zones model sort of works with ZK Sync and Tempo, respectively.
So you're essentially creating an additional trust layer here, right? So
Mm-hmm.
you need to trust the Guardian. And by the way, Azeem, while you were describing the Guardian just right now, I was thinking who your core clients now are. Could you maybe make a breakdown? Because there are so many different categories, right?
Totally, totally. So, in the initial stages, the way we've gone about very selectively or in an opinionated manner building out our ecosystem is what we think will be liquid funds, market makers, and then small to medium sized enterprises who are looking to do DeFi, who hold 5 million to 50 million USD. One of the projects building on Miden will allow people at the earliest stages to interact on Hyperliquid privately, and then very soon after, Ethereum and Solana as well. And so you can imagine where you'd be able to go and interact on Aave or any of the things that people do on other chains and be able to do so completely privately by putting funds on Miden. And so if you want something that is, not going to traditional neobanks that are, buying T-bills and helping you hold, you can actually do DeFi natively. And also with the treasury management, I mean, we've seen oftentimes the Ethereum Foundation is, most affected by this, but anytime they move a dollar, everyone knows that they moved a dollar. And that, whatever it comes with in terms of scrutiny then comes their way. And many foundations want to be able to handle their treasury management in a private way. And this would allow them to be able to do that. Dark pools is one of the things that we've been seeing and that we have someone building as well that's been super interesting is that a lot of the funds that we talk to want to be able to make sure that they don't get front run and copy traded. And so dark pools has been something that's been super interesting. Private payroll has been another thing that's come up a lot. And we have one of the companies that are building out private payroll. Oftentimes people bring up the notion of you don't want employees to know what the other employee is being paid, but there's also the idea that you have to think about where you don't want other companies to be able to analyze what your actual burn rate is. You want to be able to have things like that private, right? And so private payroll ends up being important in that way for companies that are paying people natively in crypto. So there's a handful of things that we're starting with there. It's totally plausible that other things come out and end up being really important on Miden, where we've sort of stumbled upon realizing that some of the architecture actually is going to work quite well for agentic commerce and agentic payments. Now we're exploring what that means. If I'm honest, I wouldn't be able to in depth go in it with you. We've been, having internal chats with the technical team on what does that mean? What does that look like? How do we benchmark against other chains that say that they're all about agentic payments against what it is that is available and doable on Miden? And then over the longer term, we think that, whether it's tokenized deposits, for instance, could be super interesting, or equity on chain could be super interesting. But those are the kinds of conversations that take quite a bit of time to really flesh out, partnerships that take a lot of time to close, and due diligence that takes time as well. And without being on mainnet, we're not in a position to even start doing that diligence yet with the companies that we'd want to work with. And so we've started having open-ended conversations, but the assumption would be it's going to probably take, I don't know, 1 to 2 years to really flesh those things out once we get to mainnet.
So how many projects are being built on Miden right now?
5 or 6, maybe.
Five or
Not a
six.
ton. Yeah, yeah, not a ton. We've been really opinionated about it. We've avoided the whole giving away a ton of grants to a ton of people kind of thing. We think that we have some ideas and how we believe Miden will end up being used. And so a lot of it has been based around that. We're not really doing any sort of straight consumer retail gambling things. I do foresee a world where private prediction markets come about. We don't have anyone building that just yet, but you know, that's one of the things that I can definitely see happening is private prediction markets. But
But
yeah,
are those five or six completely new apps, or just as you mentioned, for example, integrations into existing large DeFi protocols
No,
like
new
Aave,
new
etc.?
ones. No, new
New
ones.
ones.
Yeah, yeah, new ones. Yeah, yeah. So one of the projects that's building will allow people to interact on Aave without having to, while putting funds on Miden and then go interacting on Aave on EVM while staying fully on Miden, because we're not looking to rebuild like a DeFi ecosystem or anything like that.
Fair enough. But then you touched upon grants, which is an increasingly popular topic right
Hmm.
now because everyone's kind of giving up this strategy, you know? What's your stance there? You did mention grants as such,
Hmm.
so did you give any so far, and what is your vision there?
So dating back to 2022, I spent 2 years at Gitcoin, and Gitcoin was, especially at the time, the premier organization in the Ethereum ecosystem for giving out grants to new projects all the way through what had become many of the unicorns of the Ethereum ecosystem: Uniswap, Optimism, 1inch. There were so many companies that went through Gitcoin and originally got grants from them. And so I was in this interesting position where I've been paying attention to what's going on and how grants are utilized. I knew all of the Alt L1s and L2s when I was at Gitcoin because we had protocols for ecosystem development and grant distribution. So I would talk to all of them to understand how they were going about this, what was working, what wasn't working. We, while I was there, launched one of the first OP stack super chains called the Public Goods Network. So I got a chance to also see what it's like launching your own chain and then being able to look at how the grant model works. And then I was at a chain more for some time as well. And we looked at, the grant side of things. And for the most part, I think the way that grants have been done have generally created what I call grant mercenaries, the same way that we have airdrop hunters. And I don't think it's the fault of the grantees for the most part, the people who are going out looking for grants. I think that at least until very recently, only projects that were trying to build infrastructure would get access to easier funding. And the app thesis was something that was almost impossible to raise money for. And so if you were a intelligent developer who knew that they weren't going to be able to raise a ton of money to launch a new infrastructure project, it was way easier to say that you're going to do, a fork of Uniswap in some capacity on different chains and go there and see how you could collect 50 to $100,000 checks from multiple chains simultaneously. Because picking one chain and then deciding that you were going to put all of your efforts there and not being able to get venture funding later was just sort of a waste of your time, just strategically speaking, right? And so I have been looking at that happen for a while and I've seen it across chains. And so when things with Miden came about, we figured we had a thesis for how we thought that things should be used. And we're also fortunate in a way that, developing on Miden is unique. We're a Rust based non EVM L2. And so that means you can't just like copy code from other repos and just put it onto Miden. You really do need to do individual development. And we went out and really looked for builders that we thought fit into this opinionated approach that we felt was going to make sense on Miden. We'll see if that plays out well, right? It's always just a thesis. But we think that as opposed to just having anyone build anything, which they still can, that the things that we think really need to get built on Miden for the few people that we are giving grants to is more so from that approach.
So, just building on that, what is the long-term business model for Miden? Like, where will the value ultimately occur?
Where's the money?
Yeah, no, I think it'll be interesting to see. I think that as a whole, privacy chains are going to be in an interesting place when it comes to charging on transactions. And then also figuring out how you enshrine certain protocols and the revenue that they make to become revenue for the chains themselves. I think it's going to be one of the other things that probably needs to be the case because over time, the cost of transactions sort of needs to approach zero in terms of a competitive standpoint. And so figuring out what are going to be like the successful applications and how to figure out that there's going to be certain amounts of revenue that would be tied to going back to the chain. If I'm really honest though, like a lot of that plays into how we're going to go about, tokenomics and things like that. And when we go to mainnet this summer, we're not going to have launched that. We're going to be starting with the stable coin as the gas payment on the network, just because we are able to abstract that away as an L2. And when we thought about what made the most sense, we said that it would just make sense to have a stable coin be what we're using for gas. And we wanted time to actually figure some of those things out. I mean, I think later today, maybe in a half hour, actually, Clarity is supposed to go for markup in the US government. And, you know, what happens with that and market structure are going to indicate so much of what is and isn't right and how you're supposed to go about doing things, that it's part of why we said, let's just wait on the token launch so that we can understand what's going on from a regulatory landscape and see what it is that we're able to do.
It's very interesting because I think you've also seen that these charts and stats that a lot of chains currently earn less than $100 per
Yeah.
day on gas fees, which is, hilarious and at the same time very, very sad and very
hmm
disappointing. So are you not afraid to appear on that list at some point?
No, not really. I think naturally, what's very likely in the beginning will be that we'll be in that position, right? We have the cold start problem that comes with trying to launch a new network, and networks all have that. And the thing that's happened in past years is that a lot of these chains were able to launch not because there was going to be applications that would be successful on them, but on the thesis that the infrastructure and tech itself was foundationally somehow just better. And so you were speculating on the tech, but not necessarily how revenue would need to be built. And I think now there's so much more of an emphasis from every chain on figuring out what are they going to do to be able to get successful applications. Because if you are pump.fun, and in 2024 Solana wasn't making a lot of money without pump.fun, so if you create successful applications you're going to be able to get revenue. And so I would say putting more of a focus on how we think, what do we need to do to be able to create success from that standpoint, is where our mind is at. In the past, those chains didn't have to think about that because it was almost a bad idea to waste time thinking about it, because it took away from raising a bunch of money so you could throw big parties, so that you could create a bunch of hype, so that you could make the token price go up. And that was just sort of the business then. And now we're seeing that that business doesn't work anymore. And now you need successful applications, and you can't just fake everything. And so I'm sort of excited for it, to be honest with you. Like I've been thinking about this, writing about this, and talking about this kind of stuff for a while. Obviously, things in execution are always different, and we'll see how that sort of plays out. But I have for a long time been saying, hey, like, what about applications? How are you going to sustain this? Unless you're just looking to do a token pump in the beginning so that you can do treasury management, so that you have, enough runway to be able to work for 5, 6, 7 years. There's not really much that comes with hyping up the token without having a next thought, which would be successful applications that people go on your chain to use. And I'm excited to be able to start figuring out what it will be. But I'm also prepared that in the very early stages, when we launch, no one knows who or what Miden is. There won't be funds on Miden, and there's going to be work to do and being able to figure out how to get that initial stuff done.
Sure. But well, knowing you, it will go fine, I'm pretty sure. And good luck
Thank you.
with that. We're also very excited. I think Polygon is a very distinct example in this sense, right? So they
Yeah,
realized that they relied too heavily on Polymarket and some other large apps. And then just
yeah,
generally, as you were mentioning, like commissions and like gas fees are being commoditized increasingly. And you need to find new revenue streams, which
yeah.
Polygon did find in, serving large enterprises and providing this one single API, this payment stack, which is, I mean, exciting and maybe something that you'll consider moving forward as well along the
They're a
line.
close partner of ours, so we probably will end up seeing something along those lines.
By the way, that's another question. What's your story with Polygon?
So it was incubated by Polygon essentially, and they own a percentage of the token supply and equity the way that any investor would. My co-founder Bobbin ended up going to Polygon towards the end of 2021 when he left Meta. He was leading the ZK team over there at Meta. And when they were shutting that down, he went over to Polygon. He was internally building this out at Polygon for a couple of years until the fundraise and the spinout. And I never was part of the Polygon team. I joined after the fundraise was taking place in the middle of the spinout. But the story with it is just, they incubated it for a couple of years and own a percent the same way any investor would.
Right. But incubated, what exactly do you mean here? Was it regarding the stack itself, or did they
It was
help
just
from the business hub?
Bobbin was internally building things out for Miden. Originally, he went there with just a ZK prover called Winterfell, and then built out everything. And you know, Polygon basically had set up a separate team for Bobbin that Bobbin was internally working on all aspects of what were needed for being able to get this project going. And then the idea was raising outside funding to spin out so that there would be, you know, a full focus for what we needed to do with Miden, and I ended up joining in the midst of that spin out.
I'm just wondering, like on one hand, I like our show is
Mm-hmm.
about, this operational side of building in crypto and,
Yep.
on blockchains. And I'm just wondering if you have any sides or elements that you see that are still very different from when you would be building a startup? Or is there anything still distinctly different from somebody building in TradFi, for example? Or can we say it's already emerging to be very similar?
I think that in the future, most of what is consumer fintech will just be powered by blockchain on the back end. And right now, blockchain is too in your face from a UI UX perspective about all of these things. But as the tech progresses, which it's already gotten way better over the last few years, that most of what TradFi will be doing will end up using blockchain rails. If you look at how a lot of TradFi works, it's actually quite inefficient reconciliation systems across a bunch of disparate databases that need to somehow, towards the end of each day or whatever it is, reconcile the account ledgers that are on each side. But you can imagine that something that took, 100 years to come together is going to take quite a bit of time to unravel and to start using blockchain tech. And one of our theses is that to be able to properly do that, they're going to require ways to do things privately. And so we still think it'll take some time, but where I'd say it's different is when you're building out a blockchain, it's sort of like building out a new app store, the same way, iOS has their app store, Android has their app store, and the blockchain itself ends up sort of acting more like an app store than it does anything else, and then figuring out what are going to be the successful applications that you can put on top of the app store that people want to go use. And then as we abstract away the blockchain part on the back end, people will still be using that app store, but just not really know what's going on.
Yeah, no, I was in general wondering if being an entrepreneur in crypto is still the same
I
or
think
it's
so. I think
starting
it's
to
just an
become.
evolution. I think it's just an evolution. It just feels like fintech 2.0. That's like when I look at stuff, when I'm traveling, I don't usually randomly tell people when they ask what I do that I work in crypto. And so I just say like I'm in sales and fintech as easily like what I tell people, which is sort of what it feels like being the co-founder of a blockchain is it's like constant sales and a lot of the things that we're thinking about doing or working on doing, like I don't know, in a private neobank or something like that, that just feels like fintech. And it's just a new iteration of fintech.
That's a very
Yeah.
good hint. Shall we start doing it as well?
Yeah.
Saying that to people.
It makes life so much easier. When you go, I'm in crypto, people immediately assume that you trade tokens for a living. And so if the prices are down, they'll are you okay? Like I saw Bitcoin dropped. And it's hard to explain to people that we're building software. So a lot of times I just say I'm in sales, especially because as we discussed last time, I'm always on the road and meeting interesting people and it comes up and instead of having to go into this whole thing, I'm just like, yeah, I do sales in fintech.
Yeah, I mean, I also feel it's so wrong to say about, some of the bigger companies that we have now in blockchain that they're crypto projects. I mean, I
Yeah.
think the name itself is not, correctly describing because we do have great revenue generating,
Yeah.
businesses. So
Yeah.
yeah, I think the language that we use when we
It's
when we
going to
talk about
evolve.
these things, yeah,
Yeah, I think even I'm seeing it seems like crypto will go away as a term and maybe even Web3 will go away as a term. And it seems like the predominant term I've seen over the past year has become digital assets and then blockchain. And digital assets seems to speak to the assets on top of the blockchains, the Bitcoin, the Ethereum, whatever it is. And then when you talk about blockchain, you're talking about the underlying infrastructure. I'm hearing Web3 less, and I'm hearing crypto less.
What about the word token? And this is something we also need to discuss a bit in more detail. Do you think
I,
people are already allergic to that?
I think so. I think most people don't actually know what token means, though, outside of our space, right? If you speak to people who aren't in crypto, for the most part, when they say token, they say Bitcoins, plural, because to them, it's all sort of the same. And so I think we're still at a place that there's a ton of education to do on that part for people at large. And by then, I think it's just going to be seen akin to stocks or securities or something like that, especially as the regulatory landscape changes. If we get to a place where we say tokens are securities, then you'll most likely just talk about buying some sort of token the same way you buy Nike stock. And I also foresee a world where the exchanges start having a tougher time being the sole places of liquidity because let's say, I don't know, E-Trade or some of those platforms, I can't imagine that there's not a world where, even if it doesn't happen in 3 months, that they start allowing spot buying and selling of the biggest assets like Bitcoin and ETH and Solana to start maybe. But then over time, I see them adding other tokens as well for the ability to do spot trading and not just buying these ETFs, which is a traditional instrument where you're having someone else custody the Bitcoin ETF, right? Someone else is custodying your Bitcoin. But I think that figuring out what it's going to take to build tech that will allow individuals to sign into their traditional finance accounts where they buy stocks and then also hold natively and in some sort of not full self custody because it would be on the platform, but I see that coming. And when that comes, I also imagine other assets end up being on there, which will require, again, like regulatory clarity. And I would sort of see it as an extension of what Robinhood's already been doing, right? Robinhood does allow people to buy these things. It's just Robinhood is the younger people way of doing that. Like I don't use any of those older platforms. I do Robinhood for everything. But people who are a little bit older that are accustomed to those platforms are also going to want access to those same investment vehicles. And so I see it sort of going there. And I'm curious what happens with centralized exchanges sort of losing access to being the arbiters of where all liquidity lives.
Now, this evolution is indeed very interesting, but can you talk to us a bit more about the Miden's, well, future to be token? So, from what I understand, from what I've seen in publicly available resources, you raised for Safe Plus token warrant, right?
Yep.
So I'm just wondering whether it was originally your vision, to be a bit hesitating, whether to launch the token at all. Like, can you just talk a bit more about it?
To be honest with you, it's a everything like sort of a thought in progress is really what's going on. If I'm really honest, right? I think I have been in ways fortunate in that, most founders are actually not sure what you need to do to launch a token successfully because it requires, being in a position where the right market makers and that the right market makers would want to work with you because just getting access to market makers isn't enough. You need to be able to know and get the top ones to want to work with you because they're very selective about which projects they want to work with. And so for a variety of reasons we're fortunate in that we know all of the best market makers. And then when it comes to centralized exchanges, there's this entire game where people pay token advisors to go out and negotiate on behalf of the exchanges for them. But because of the work that I've been doing for years, most of the exchanges, if not all of the exchanges, I'm friendly with the listings teams. And so knowing what it is that you need to do to launch a token from the listings perspective is something I understand. And then, I don't love it, but the whole model of how KOLs work to drive up hype before a token launch is another thing where when you're some of the very well-known versions of these KOL groups and KOL agencies, you're in a better position. And I know all of the right KOL agencies and individual KOLs as well. And so there's this entire ecosystem of things that you actually need to do to be able to launch a token successfully. It's just that in the past year, we've seen that that model doesn't work anymore. And I sort of saw that coming when I joined Miden. And it's, having been in this space for a long time, it was seeing this sort of evolution in real time. And I think it's a good thing because it means that, doing all of these more duplicitous things to figure out how to launch a token so that you can do treasury management for your company, or a lot of founders who just launch the token so they can self-enrich themselves. Those practices just aren't as easy anymore. It used to be you could do those things and launch a token that went to multiple billion FDV for a couple months. Then it changed where you could do it for a month. Then it changed to a couple of weeks. Then it changed to a week. And now sometimes you get pumps for like a day if you're lucky. And you need to figure out how to sell all the tokens that you would need for your company's treasury for that. And with that has also come, we've seen a good couple of examples of protocols that were sold to another company, and then token holders were completely screwed over. And it's because they didn't really have any recourse to the equity of the company in any capacity. So when the sale took place, the token just did a nosedive because what are you supposed to do? The token's not really tied to anything. And from the start, looking at this, when I joined the project in May of last year, it was looking and going, things are changing, and launching a token just to launch a token is not something I'm interested in. If that were the case, then there's a lot of ways to just make money. But what we're doing at Miden, I truly feel is actually a necessary piece of how we can evolve the blockchain world, the digital asset world. And so all of these things need to be done very thoughtfully. And if you think about the position that we're in right now, let's say, we're going to be looking to raise additional money soon. Since we're not launching a token, we're going to need to be able to have more runway. So we have to go out and raise capital. And there's a ton of things that come with just being able to get to mainnet when it comes to the team coming together to figure out how we push the roadmap together and get that out of the door. And then we have ecosystem companies that need support in a variety of ways, not just in capital, but in help on business development and understanding how they do go to market and understanding how they do marketing and understanding how they do design. And we want to be able to offer sort of that support. And then there's also, proving out this thesis of institutional adoption and being able to get LOIs and MOUs with different organizations, which we've been fortunate to do, and we have more of them coming out. And then when we get to mainnet, we'll be figuring out what we need to do to integrate those things. So getting the LOI or MOU is cool, but like from there, you have to figure out how to actually get the integration done so that it's live. Another thing that takes a ton of time and effort. And then we're in this place where regulatory clarity is sort of like in the middle of where it's going to be going. And it's not fully finalized, but we have more guidance on how things are looking from the CFTC and the SEC. But to get laws that really pass the same way that we did with Genius, which gives us a framework for what it means to launch and have a regulated stablecoin. And so for us, a lot of it is really paying attention to what's going on and not trying to force something, because we see having a token launch as being in a position where you have a gun with only one bullet and you need to be perfect with that one shot. And so, for whether it's for the people on the team or for everyone else, just launching a token to launch a token just doesn't make sense. We could do it. I can confidently say we'd get all of the right exchanges, we'd have the right market makers, we'd do but like launching a token is not the end of the project, it's the beginning of the project. And so with that in mind and knowing that the work really starts from there, like I think of a successful token launch as a token that goes up and to the right after unlocks occur. Not for the first month, not for the first 3 months, but it's like if once investor unlocks start to take place and no one wants to sell the token because they think it's going to still keep going up, that's a successful token. And so we're trying to figure out what are the things that we're going to need to do to be able to make that happen.
And then Azeem, you also mentioned the stablecoin that you'll be using instead of
Mhm.
your network token. Is it
Yeah,
going to be an existing one or your own?
could end up being both. We're honestly negotiating.
Okay.
Yeah, when you're trying to launch a private and compliant stablecoin, which is what we're doing, it introduces a host of questions that aren't necessarily ones that you have to think about on a public network. And so we've been chatting with all of the different issuers, whether they're the white label stablecoin issuers or the ones that are just directly the issuers, or it's the existing stablecoins. And we haven't honestly decided. We're sort of towards the finishing rounds of figuring out which stablecoin it'll be, but haven't actually come to that conclusion just yet. And a lot of it has to do with exactly that, is figuring out sort of the final things around like well, what does private and compliant mean? Does anyone need access to view keys? What is the compliance backend that's needed to do it? Do we have to handle that compliance, or does the issuer handle that compliance? And so there's a bunch of questions that come up, which again goes back to sort of how we've been talking about that we're thinking on pacing when it comes to launching things, because everything in this space takes time, and underestimating the time that it takes means that you're miscalculating a lot of things that end up being affected later.
I think you're a very illustrative example of a founder of a team that really has this unique opportunity to kind of, look back at everything that's happened in the industry all
Hmm.
these years and really create like an ideal, kind of construct an ideal system, right?
It's
Like
been
looking
fun in
back
that
at
way.
what,
We'll see how ideal it is, right? We have to go to launch, we have to create success, but I would say
well, nothing's
for
ideal.
yeah, but for sure, I agree with you, is that I feel very fortunate to be able to draw on so much experience from myself and other founders and things that I've seen to sort of understand how it is that I want to go about and the team wants to go about doing things.
All right. And guys, I know we're very short of time, but I can't let Azeem go without asking about the competitors, which is really
Sure.
an exciting question for me. So, how do you guys position yourself versus Canton versus Avalanche with the subnets and all those like very privacy focused chains you
Hmm.
mentioned, like Aleo and Aztec? What's
Yeah.
the UVB here?
So honestly, a lot of it'll come down to where the users are. I've been I've admired, let's say, what Canton has done so far a lot. I'm friends with one of the founders, and him and I are going to be chatting about tokenomics soon because of, how I think that they very successfully launched what is probably the most successful token in the last maybe like 18 months. Last time I looked at Canton, it was at, I don't know, like 6 billion FDV, and their market cap is their FDV. They didn't do a pre-mine, none of those things, and launched the token fully 100% out. I thought that was super interesting. And they've gotten all of the best exchanges to list them. The token's been going up since they launched. Granted, they were also in mainnet for almost 2 years before they launched their token. And so, there's things there. And then the things that they've done in the repo market have been fascinating to watch. The amount of hundreds of billions in clearings that happen. They found a very specific use case that their tech solves for. And they've really been working at that, and then are now figuring out what they're going to do for, the next stages of things. They have other things that are coming out. The Aleo and Aztec teams are ones that we're very close to. And, when we think about where we're at compared to them, I mean, I think Aleo has raised more than 10 times what we raised before they went to mainnet, and they've been in mainnet for a few years. Aztec, I think, has raised close to, with their ICO, 8 times what we raised, and they've, now been in mainnet and have their token out as well. Uh, Tempo is one that, I think what did they raise, like $500 million, and so I think what I would say is that I'm closely paying attention to what all of them are doing. But when it comes to, still having a way to go, you mentioned Avalanche and ZK Sync as well. Again, like two networks that have been live for a very long time, have been working for a long time, have been able to do BD for a long time, have been able to show, the network stay stable for a long time, despite, different network activity that may cause security issues, let's say. And so I think for us, a lot of it more so comes down to getting ready and excited to be able to go to mainnet so that we can actually start to compete. Right now, I don't think we're at the place yet while we're on testnet for me to tell you that we're, leaps and bounds better, because it's just hypothetical. It's just testnet. Once we get to mainnet, then I'm excited for us to be able to show and prove where we think that we can competitively go after each of those different places.
And then it's never a zero-sum game in the
No,
blockchain
no, no,
space,
it's
is it?
never a zero sum game. I tell people all the time, it's one of the things that I strongly, strongly believe is that everyone in this space who's focused on getting their slice of the pie doesn't make sense to me, because we have all the ingredients we need to bake more pies. Because the idea is to make the pie of who's using this technology bigger. And so even if you hold a smaller sliver of it, it's going to be more valuable in the end. And so this zero sum mindset where we feel like we need to take away from the existing projects doesn't make sense to me. I've gone out of my way to have a really good relationship with many of the teams who everyone would say are our competitors. Like I said, I'm, chat with the Canton founders. I chat with the Aztec founders. I chat with the Alio co-founders. I chat with the ZK Sync co-founder, the RCM co-founders, the Zama co-founders. Like I'm good friends with and do my best to be able to be in touch with them. We've hosted now 3 privacy salons in different places that bring together the best privacy projects to talk about, all of the things that are going on in the space. And I think it's an important thing to do.
Oh, that I don't doubt, because after we released the first episode with you, so many people DM'd me saying like Azeem is great. I've known Azeem for ages, and so on and so forth. And
I'm glad.
yeah, no,
I'm glad.
this
I'm glad.
resonates very much. And Azeem, very like on a concluding note, very last point. Imagine I'm director of tokenization at JP Morgan.
Hmm.
Could you pitch Miden to me in a few
Honestly,
sentences, maybe even in one? I know you're talking to them already, but still.
I didn't say that, but maybe. It would honestly just be, look, like if you're looking for a network that's going to be decentralized and permissionless in the future, meaning that there's no counterparty risk and teams that don't necessarily trust each other can in a trustless way interact, then you need to come talk to Miden's team.
Okay, I'll
Yeah,
probably consider that.
yeah.
Thank you for the offer.
It was a pleasure doing this. We should do it again. Maybe after mainnet we can talk more too, stuff like that. Feel free to message me whenever.
That'd be fantastic.
Yeah.
Azeem, thank you so much for
Great.
spending this almost hour with us.
Yeah, absolutely. It was nice.